Rohr here with an early global view on Thursday, April 2nd, 2015. It's currently 7 a.m. U.S. Central Time, and we want to remind you that today is the last trading day of the week except for the abbreviated derivative sessions on Friday, as the U.S. employment report will be released and there will be no trading in the cash markets, but there will be trading at the CME on a limited number of derivatives to respond to that report. In case you have not been warned or alerted elsewhere, consider this your warning. So, what does all this mean to the markets? Well, in spite of the relatively firm U.S. auto sales yesterday and not much data today, the downside momentum seems to still be with the markets as we're off for today, down at the 2045 area in the S&P 500 future. However, as we pointed out repeatedly, not just of late, but on previous swings that we'll take another look at on the intermediate term charts, the bigger critical support is 2040 to 36. And that's been a very significant holding area on recent trade. And if it should break, the market might be down in the whole lower range, more convincingly down in this lower range. It's actually down into anywhere below 2060. But the next support would be 2020 to 17, with the bigger supports not until down in the 2000 and upper 1900 areas. And what's important here with the market under pressure this morning is that the hourly MACD never really got back above the lower runaway band when the market improved throughout the entire day yesterday after the hit it took on the opening down to test 2040. So while it looks contained on the break for now, the bulls actually need somewhat of a rescue, and we have to allow that the next trip back up to 2060 is going to be very important as well, because the market, after taking pressure on Tuesday, came back to close right about 2061, and if it can start cleaning up above that, ostensibly the next resistance is back up in the areas it tried to escape on Monday, up at 2075 to 78. Of course, on the gap lower Tuesday, stalled right into that area that ultimately attracted the selling pressure, but it also has a down break now out of the most recent attempt to pop up out of the weakness into the 2040 area going back to last Thursday before it stabilized on Friday. The down break is right around the 2072.5. So even if it rallies, you'd think above 2060, it could get back to 75 to 78 at least, but we'll have to keep an eye on it around 2072, 73. And that pretty much does it for the short-term view of the S&P 500.